Some people were asking just about like morning routine stuff. Um, and I guess it's kind of like a military thing, I guess. But it's good to talk about because there's definitely a pattern um, that I go through, and I think a lot of the different traders and people that do this, full time, go through. Um, a few things, I usually get up around 8:45 and just the first thing I do is, turn on CNBC, and most of the time, and I talk about Kramer a little bit. I know some people don't like him and stuff, but he does give a market analysis, usually about 9:15 or so, 9:10, and he talks about what he thinks the market's going to do, and that's usually all right. And they go back and forth. So that that's one of the pieces. I definitely listen to that. I think if you go into, and I'm sharing my screen here a little bit, if you go into the premium data, um, and I'm kind of going through this because I looked at it a little bit, but I kind of just want to go through what I'm doing. And I'm listening to CNBC right now. And so this Fairfield lead strategies, it talks about futures and if you know how I trade it, I'm mostly trading the indices anyways. I'm trading SPY, QQQ, sometimes the diamonds, DIA, IWM, MDY, uh, and then some of the other indices. But I like this because it gives me a basic overview of the market and what could happen, today. So what she's saying here, and some people had some questions on this, but SPX is the futures for E-mini futures, which is the the mini S&P futures, which the large S&P futures, and we can go into this later if you guys want, but large S&P futures are just pretty expensive. The E-mini made it more accessible to people, and that's what's majority of trades are on futures is E-mini. But she talks about the continued rise from the 10% from the lows in September, and she also talks about, which is interesting, and if you've read any of my posts, and I posted this before. I've even seen this, but I did look at this a little earlier. I have 35.50. I had that before, and I said we're going to take that out again. She has 35.88. Futures is a little different than the actual indices, so it looks like um, it's pretty close to what I have at the 35.50. But she says we'll take that out. She has 38.25 as a target. I put 37.50. Mine are usually pretty on the 50 or on the 100. I don't go to the 88 or 25 like they do. They're more technical in nature. I just try to go to a nice even number that makes sense to me. Anyways, but we're really close as far as our targets. So basically, continuing the bull market going up. Um, she does see some short-term exhaustion, which we saw that yesterday. If you look at the RSI and the MACD, like the two things that I look at when I'm trading. I possibly, if I was trading yesterday, I possibly would have put in some puts, and I would have lost on them yesterday if I didn't understand. And we can get into this later, but if I didn't understand the fundamental stuff that was going on yesterday, which was the Apple phone being brought out, and the Amazon Prime days, and so those were going to push the markets up, regardless of the oscillators, and the basically indicators telling you that we were overbought yesterday, um, and that's basically what happened. If you look at the 5 minute and look at RSI yesterday, you do see, it's definitely overbought, indicators. And did it come down a little bit? Could I have scalped maybe a little bit, but there wasn't a whole lot of opportunity there yesterday. But she, in this report, she basically talks about it being exhausted and overbought. But it's not really, she doesn't really think it's going to come back, especially if there's a breakout over the long term gains. So that's one of the and that's really what I look at there. There's some other stuff on this report, but the important part for me is we have a upward trend. We're still in a bull market. All right, so that's that. Now I do like to go into, and I do this on another screen of mine that I don't have on here, but I like to just go into the regular futures, and I usually go over this with you guys on voice. And I know some people were saying they're visual learners and all this, but you know, you can go to any website you want. CNN has it, investing.com, any of the free sites. But I'm, I look at the Dow futures, the Nasdaq futures, and the S&P futures. So if you see Nasdaq futures right now are about 0.5% up. The S&P futures are about 0.4% down, and Dow futures are leading the way down at 0.67%. So that shows me that tech is still leading. That Apple Amazon trade is still going to be up big, as some people say. But the reality is, you know, it's up maybe 0.75%. You know, Apple was. So it's going to pull the market a little bit forward, possibly into this event that they have today. But you know, tech is leading the way up, and the rest of the market is kind of getting that pullback from yesterday. So that's what I see there. Okay. And then commodities, and we've talked about this before, but gold is down 1%, right around that 1900 mark. Silver always leads the way either way. So if you know what silver or gold's going to do, then play silver, and it's going to do it times 3 if you like leverage stuff. That's kind of how to do that, and silver is always cheaper. Um, and then oil's been real weird because of the hurricane, so oil's up a little bit, but the commodities are pretty much following what the general overall market's doing, typically the S&P. So that's what I want to see there. So now I have a general idea, and then we'll go into this. I talked about it a little earlier. And so we're thinking that the Apple and Amazon play were similar, you know, to the earnings play, um, you know, that Tim does, and then basically you kind of move into it, sell kind of right before it. You know, basically the idea would have been like buy last Wednesday, Thursday, and then sell. I guess sell this morning, right? If the event starts at 1 o'clock, I guess that would be. You can ask him more about it, but that would be more of like a typical earnings kind of run up and sell before the event type deal. So we'll see if that actually holds true. But I think I would go back to, you know, selling yesterday before the close probably was the safest move. I don't know if we'll get, you know, that continuation. I mean, we're seeing a little bit of it. Apple, let me pull this up real quick. You know, Apple is up 1%, but when you compare it to up 6%, you know, do you still want to chase it to the end, even though you may get wrecked and it may pull back? Especially if they are going to have some problems with the 5G, which has already been reported, especially the network issues that they're having with 5G, unable to support the phone, stuff like that. Um, or does this thing, you know, continue to take off throughout the day, and is it a great event? I don't really know, but there's nothing wrong with taking profits, you know, yesterday, especially if you have leverage and, you know, utilizing options on that 6% gain. Everyone that I saw did really well on it. So there's nothing wrong with doing that. So as far as today's goes, I mean, I'm still gonna do the same thing that I normally do as far as scalping stuff. So um, I would look at. I'll see if I can pull this up here. I won't be trading on this screen, but I want to pull up some chains for you. So Nasdaq 100 is at 296. So let me see if I can pull this up real quick. And this is just a account that I use to show people stuff here. There's no money in it. So QQQ's at, and I'm looking at a different screen for a different chart, but what I want to show you guys is the options chains that I look at. So October 16th would be where I'd be at for scalping on QQQ. If we believe that we're going to continue to get a rise through Apple and Amazon, then I mean calls would probably be the way to go. The pricing doesn't really matter yet. We'll have to actually wait until the market opens on this. But if we know it's going to open around 296.50 or so, 296.36, then we're going to be about 298 or so, 299. And 300. I don't really know if I want to go that far. And they're going to be a lot more expensive than this. We got to see what happens on this open here. But I'll pull that up in a second, and we'll go through that. But that's basically the routine that I look at. So I would say that I'm mostly bullish on the day, but I do see that we could have some kind of event that causes a pullback, and I'd be ready for that for sure. Just as a reminder, the even though I wasn't necessarily trading these options market, right? So I have long-term investments in QQQ, SPY. I have the TSP, S fund, the L fund, the I fund, and stuff like that. So those are doing well, and so a lot of the times when I'm going on the downside, it's hedges on the other investments. So um, we're real happy when the market goes up. But if we can make money when the market goes up and down, then we're doing real good. All right, so market's open. Let's see what kind of pricing we're getting. 295 is, so we dropped. Nice. Let's see here. And we're right back at the open of pre-market. So let's see what happens. Kramer said Robinhood crowd discovered options. Hopefully that's us. So watch this move down. I think that you could get in 301. 301 at 150 would have been good. It was actually at 144. So 301, we're only at Tuesday, and this is how I picked this, but we'll see what happens on this. So we're only on Tuesday, and my rule of 1 to 3% is still. What's actually going on? 1 to 3% still in place. So being on Tuesday, you can go about 2.5% would be fine. As we get closer to to Friday, you want to get closer to the 1%. As far as break even goes, 302.38. I mean, it's possible, but we're still scalping here. It's a cheaper entry point, and I don't really know what's going to happen. I don't know why it's delayed here. I don't really use the desktop version of this, but I was just trying to show you guys. We'll see if 295 holds. And it doesn't look like it. And if you had Apple, I hope you got rid of it. So Apple's down 1.5%. Amazon's almost flat. Well, Tim, you were right there, huh? Looks like yes, and Amazon just went negative. So if you looked at these, the 301 calls, right, on a pricing level, and we're coming back up now. And you can buy more if you wanted, but the reality is, so it's a 15-cent loss from that one entry. Would have definitely nibbled in, like I always talk about, and you could get a better cost basis if you were still interested or still thought it was going to come back up. I don't think it's going to happen. I would have cut it already. However, the drop wasn't that significant because we did get in on a decent downward move. So now the question is what to play next. 295 is still holding. Steve was saying 354 on Spider. He's crazy. It's not going up. But he was right yesterday. So if you got in those 301s, I mean, you're still within the break even. So if the break even goes above a little over 3%, then you definitely want to get out of those. But if you still think Apple's going to have a great day, then and QQQ just went negative, so this thing could have a nice little drop today. And so if you're looking at money starting to flow into, look at JPM. Oh, JPM is not taking it either. City. See what they're doing. It was going into financials earlier, and they're selling off too. So now I like to see where the money's flowing into. So if you look at like a heat map, you can start to see where it goes. It goes somewhere. Disney's up. Well, looks like continuation didn't happen. And we'll see what happens. So the Apple event happens at 1 o'clock Eastern time. And Apple and Amazon are going to, like I said, pull QQQ. So, and these calls are expensive still. There you go, 294. Let's see if that holds. So you go 299 calls if you at 173. If you believe that 294 holds. 171. So that first trade of the day is usually just a establishment. Because as you see that first trade moves a lot. Um, and then the second like trade that the 299 is really just so we saw the downward move and some exhaustion into the downward move for it. If you're watching it on hold on 1 second, let me pull this up. So if you watched it on a chart, right, you see that RSI dropped almost to 20, right? Yeah. So 294 is a pretty good number, and then that 170 on the two is holding pretty well. So that's an actual like first trade based off the indicator. But the first trade it usually does okay. It's market direction and momentum and move, and usually it's just kind of a for a poker term like limp in and see if you're right on the market direction. But apparently, the run up today on Apple that everyone was talking about, it could still, but it doesn't look like it's going to happen. So I guess it goes back to being right yesterday at the end of the day. So there you go, RSI bounce back into our window, and then 294 is holding. But we're back at well, there's an option value that's interesting. So what happened just then is it's not good. So basically, premium's getting sucked out of these. And we're getting a further downside move. So it looks like people are not as interested in calls. And so you're seeing value come out even though we're still at the same level. It's interesting. We're back right at around 35 RSI. Looking for that 294 to hold. A little concerned about the options pricing though, because we didn't just lose that much time value. That means we're losing premium from implied volatility, the interest in the option itself. It means people aren't buying as many calls. So it's a profitable trade right now, but unless we get a nice little bounce, it's not. So on options, we need to continue to get a nice little bounce. We need that momentum to continue, probably to go positive. Um, and then so if we get up around the 294.50, we will be good, and then we'll get some more momentum and get that premium turning positive again. But we bought in at around the same value, and or the same underlying value, and the premium's not the same, so that's not a good sign. That means people aren't buying the calls, especially at this level. Well, there's going to be a lot of sad people that held on to Apple. And I don't have the chart pulled up for them, but I'll tell you and I think you're probably finding this out, Tim. So that implied volatility goes up a lot right before earnings or an event and all that, and it gets sucked out right before. So because there's not as much interest in options, right? So the same thing will happen when an event like this. Once the event goes down, the options value is going to go down. So if you're holding options, it's time to sell them before it makes more sense in the whole plan. There we go. We're almost there on even on this. I go 185. So that's a decent move up. And I just sit here and watch this. Those 299 calls and see if you can make some more money on this. Um, as far as targets today, I really don't have any idea. I would continue to watch and scalp using the indicators. Kind of, I got my other screen on Apple and Amazon. It looks like that, and we're gonna be around flat all day. So we'll see what happens here. So I'm out of that. Um, See what Steve's doing. He's talking about SPY. Yeah, I don't. If you're interested in SPY, we can go back to this. 354 is what he was saying. So, you can trade the ones for. That's a good thing about SPY, right? So they have options that expire tomorrow on Wednesday. You could trade. He was talking about the 354, which has a break even of less than 1%. And they're only 80 cents. 354, 355. A 1% move to the upside if you're still looking at calls. And let me pull up the trading view SPY. Yeah, and I'd let it drop a little bit more right into. We're pretty close to that previous bottom for the day. So right at 351 or so, you can probably start picking those up. And see if 351 holds. What else I like to look at is, so 72 is the low for the day. So buying in right now seems reasonable. Looking at the chart, we're about at the low. So if you were just able to get in 72, 73, that's a pretty good deal. Just remember theta. It's the only Greek I really care about. The theta, 74 cents. So this should be a scalp for the day. You can get back in 73. So 74 cents, that means by the end of the day, it's going to be pretty worthless. But if there's 75 or 75 cents, it's only worth 75 cents, you still have another day. It might be all right, as long as it doesn't drop too far. Just remember, trading day of options, pretty risky, and or day before expiration can be pretty risky, and so don't put all your money in this. Whatever a good percentage is for you, but if you can get it for 73 cents and then to 81 cents, that's pretty good. So that's all that is a bounce from 351.19, 351.52. And I would just ride it up to 351.75 if we can. And I love being right around here. Showed where you could get in at 73 cents and positive. With a good chance for an upward move, that's a good place to be. while we're sitting here watching this, the that first trade of the day, it's it's going to be a lot of movement, and you don't really have clear direction necessarily. So that's very small. Like for me, that's usually 10 to 25 pounds small, and the trades where I have clear indicators and I'm following, like this trade, for instance, or the one we did earlier, that can be a 200 contract trade for me. So big difference. So like if the opening trade is one contract for you, that's fine. And then if this is like something that's more concrete, clear direction, that's maybe 5 contracts. So I want you to understand the money management side of it, because that opening trade can be more like a bet based off of what you think, not necessarily clear indicators saying what. And some people may say that's not the best idea, but I'm usually pretty good at those, but obviously not always correct. So, which is fine. I mean, I don't always want to be right, and I'll still post this video. It's just that I want you to understand that that would be a smaller investment or something like that. Especially because we talked about it. Like I had some real issues as far as whether I thought Apple was going to continue today. And we had talks about it with other people. There you go, 10 cents, another 12, 13 cents. So, and we're at my target of 351.85. So that's the previous. So we'll see. If I had 200 contracts, I'd be selling maybe 100 now.
Eat your stuff, buddy.
We'll see if we can get back up there again. Maybe on this move. Knocking at the door. I'm assuming if it's going to push through. There you go. I would sell 50 more right there at 88, and I would have 50 left. And we broke through and pulled that back. And so if you're paying attention to that, basically I let a quarter of those run and then just see what happens. So some people would kind of let it all run, and I mean, the problem with that is it's kind of like an all or nothing bet. If we hold, I don't see a lot of upside after that though. Maybe to 352.20. This move may go to, unless we get some news or something. And now if you see, even though we're at 350, a bit. What happens is that options price gets exhausted because the move isn't continuing. So that's about it there. I'd sell this. Get out. 90 cents. So 200 contracts at about 15 cents on that trade. And then just find another one. Wait until some of the indicators hit again. So I have my RSI set at 35 and 75 right now, and that's kind of it's kind of the standard. I'm sorry, 35.65. And we're coming back down right now. All right, so that's what I got. If you have any questions, then go ahead. But there's three trades that we went through. The first one of the day. But as I said, it's kind of a limp-in trade based off of the direction and what we thought. Apple phone coming out, and then also, but we didn't get a continuation from yesterday. And then some actual scalps based off of RSI and MACD indicators, and those are the normal scalps that we do. If you have any questions, then post them. If not, then we'll set up something else. I'll try to do a couple videos and post them as well. All right, thanks for following.